All right, y'all. So in this session, we are going to be going more in depth into the order flow and footprint charts. Now, some of this is going to be review of the last session, but I want to make sure that you thoroughly understand these concepts because they are integral to moving forward as it pertains to incorporating this data into our trading strategy. And I'm going to be coming at this from my perspective of how I use these things to actually trade, because I have a very unique style of trading. But essentially what a footprint chart is it's going to give us the volume that was traded at specific price points within a specific candle. So if I'm over here on TradingView and I want to know exactly how many buys and sells took place right here within the wick of the candle, I have no way to get that data. If I want to know exactly how many buys and sells took place right here in the body of this purple candle, there's no way for me to get that data in TradingView. I have to go to a footprint chart. And here in the footprint chart, as we learned in the last session, I can go ahead and put on the volume, which will then give me the exact number of transactions that took place within any given price point, within any given candle, whether it be the wick or the body. So I can see there were 4 million total contracts transacted here at the price of 44,480 in the upper wick of this candle. Of course, this information is very important because if we are able to see the exact number of buys and sells that occurred at a certain place in the chart, we can make decisions. We can see, are there traders trapped in their position, which is advantageous to us if, let's say, we're looking to go short and we see that there's millions of long trades that are now underwater who are going to be forced to either close their positions or get liquidated. It's also going to encourage more people to FOMO short, and it means that price is likely to come down from there, for example. Okay. Now, when first looking at footprint charts, it can be very overwhelming for people because they see things like this, right? They just see all this data. They see the footprint bar statistics down here. They see CVD, all these little added bells and whistles. But again, like I went over last session, it's important just to strip this stuff down and start with just the regular old color candles and then add from there, because it will help you kind of put into perspective what you are seeing. Okay, so when we dive deeper, there are 3 types of displays that you can select to show up within each footprint candle, and we went over this a little bit last time, but basically there's volume, bid ask, and delta. Volume, bid ask, and delta. They're all telling you the same thing from a different perspective. The volume is telling you how many transactions occurred at a specific price point within the candle, okay, in total. Right here, 2.1 million total volume occurred at the price point of 44,260 in the wick of this candle. If we go to delta, this is buys minus sells. So however many buys minus sells there were right here, we can see that there are 588,000 more buys than sells at 44,260. And right here, there are 623,000 fewer there are 623,000 more sells than buys. If the delta is negative, there's more sells than buys. If the delta is positive, there's more buys than sells. I know I went over this in the last session. Just to recap, bid ask, this is dividing the volume up into total buys and sells. Sells are on the left, buys are on the right. We can see right here at this candle right here at the price of 44,260. If we go to volume, there's a total of 2.1 million volume, but if we go to bid ask, of that 2.1 million volume, 1.4 were buys and 768,000 were sells. Now, if we put on the imbalance, this will tell us when there are imbalances in the number of buys and sells. We're going to get into this more in the session, but it's important to know, guys, that the data can only show you market buys and sells, and it is unable to show you limit orders. Okay, what we can do is we can use the data we have pertaining to these market orders to infer things about limit orders that are probably being placed in the market, but we can't know for sure. We can just use the clues. In a way, we're solving for X, right? When you have an algebra problem, you have to solve for X. What is missing? Okay, what number is missing here? When we have the market orders and we have the imbalances and stuff like this, we can solve for X when it comes to what are the bigger limit orders doing. Okay, for example, if we see a lot of heavy selling and lots of shorting, at support, and yet the price does not come down more. We can infer that all those market shorts are basically the price is being held up by large limit longs. Even though we can't see those limit longs, the fact that the price does not move lower, given the fact that there are so many market shorts that we can see, allows us to infer that there are bigger players holding the price up by basically absorbing those market shorts into their limit longs. We're going to get into that more later in the session. If that confuses you, we will talk about absorption, okay, and more so even in the delta and CVD sections. So let's quickly go over the different ways to display the data. Again, clusters, ladders, and profiles. I recommend, if you want more on this, you check out the jumpstarttrading.com footprint chart link in the course materials here. But essentially, we can display these things in multiple ways. Basically, cluster is going to give us a visual representation of the text. So we could do a profile, a volume profile, which basically is giving us the amount of volume that was traded in a visual representation instead of a number. Okay, if we put on the volume, we can see that it is proportionate, right? If there's 7 million volume, the bar graph is going to be bigger. Then we can decide to put on the delta profile, which is going to tell us there were a lot more shorts here than there were longs, or there were a lot more longs here than there were shorts. Okay, that can be even displayed with the delta as well. And then the bid ask is going to show us sells on the left, buys on the right, incorporated, lining up nicely with the bid ask text, so we can easily see how many more buys or sells there were in any given candle at any given time. Okay, it makes it very easy on the eyes to kind of see if you're zooming out here, and you can see, wow, there were a lot more buys on this candle than there were sells, right? And we could zoom out even more and really see the overall bid ask profile as we're just kind of scrolling through the price here to kind of see, for example. And this is a good example of trapped shorts. Look at all the shorts that opened up right here. And then as price came back up, those shorts are trapped underwater. And now price moves up from there. Okay. So as you've probably noticed, these three things are giving us the same exact data from three different perspectives. And we can mix and match the visual and the text. It's akin to as if there were three individuals on a highway, on the side of the highway during rush hour, watching as 12,000 cars drove by. And then you ask them, after they experienced this, what did you witness? You ask them the question, what did you see there on the highway? They might give you three separate answers. All three of these answers could be correct, but they'd be giving you basically the same exact information from a different perspective. So one person might say to you, today I saw 12,000 cars drive past me on the highway. And that's akin to total volume, right? And then person number two might say, I saw 5,000 cars drive past me going north and 7,000 cars drive by going south. This is giving you a bid-ask profile, so to speak. And then the third person says there were 2,000 more cars driving north than there were driving south, giving you the delta. And I noticed actually this should say there are 2,000 more cars driving south than there were driving north. And this is giving you the difference between north and south, just like delta is giving you the difference of buys minus sells. Okay? So it's all the same thing from a different perspective. I want to talk about identifying trapped traders. This is very important. Trapped traders can be identified by looking to see if there are, for example, as this screenshot shows, a large number of sells here on the left in the wick of this red candle. When the price then moves up from here, these traders are trapped underwater. And when you see trapped traders, especially at a level of support or a level of resistance, it becomes much more likely that price is going to move up from there. Now, the way I like to do this is I like to look for trapped traders when there is also a divergence on Market Cipher. Also, you can look for a CVD divergence, and we will get into that later. But if you see divergences on Market Cipher B in combination with trapped traders, it's very, very likely that you're going to get a move to the upside. And, well, if we're at support and if we're at resistance, it will be a move to the downside. And a profile is a great way to do that. So, for example, we can see right here that we have our bid-ask profile. And again, down here, look at all the shorts that opened up in this candle. that are immediately trapped, okay? And from the point that they're trapped, price gets a significant move to the upside, right? Price gets a significant move to the upside. And we can also, let's just scroll through here and see if we can see that again. Right here, look at this. We see that there's a lot of shorts opening up right down here that are immediately trapped underwater. And from that point, price gets a move to the upside. Let's see if we can see that anywhere else. Right here, we can also see, if we zoom in, there's a lot of sells right down here that are now trapped underwater, okay? So, let's see if we can find any trapped longs. Sometimes it's hard to see, and there's a lot of other things that we can do besides looking for trapped traders to determine if we're going to get a move to the downside, but it's definitely a very big confluence. Right up here, we can see there's a lot of trapped longs in this candle, right? There's a lot of them. And from the time that they're trapped underwater, price does get a very significant move to the downside here. And of course, this is the half-hour chart, so we're talking like, you know, an hour and a half of price action, which would have made for a pretty nice scalp. Could have made for a nice scalp. Now, another way to identify trapped traders is by looking at something called imbalances. Now, imbalances are on the bid-ask profile over here. Okay, not the bid-ask profile, but the bid-ask text. We want to click imbalance, and I'll zoom in here to show you what that looks like. Essentially, what it's going to do is it's going to highlight certain areas of the bid-ask profile. And if we go ahead and put on, let's say, a delta cluster, we can see this more clearly. Where we have the box behind the number, that's showing us that there is an imbalance there. That's showing us that there is an imbalance. And imbalances are not talking about left versus right in the same tick. They go diagonally. So we're always comparing the right tick on the upper, the right buy, the amount of buys on the upper tick to the amount of sells on the lower tick. And that's true for buying and selling imbalances. If price is coming up, we want to look at the tick before the current tick and compare it to the current tick that we want to look for an imbalance on. Okay, so we can see I've circled here the way you would look for these imbalances would be diagonally. Now, this doesn't really matter if you're using ExoCharts because it's just going to highlight it for you and show you, yes, there is an imbalance here. Now, imbalances are another great way to spot trap traders, especially stacked imbalances. And the way you can set these imbalances up is you can go to settings over here and go to VA POC imbalance, and basically the bid-ask imbalance calculation percentage. A lot of people do 400 to calculate what percentage greater the one has to be than the other before an imbalance actually shows up. 400 is a pretty common number right there. Some people use 600 and 18% as well. 400 is pretty standard, and basically that's just showing you it has to be 400% more before the imbalance actually shows up on the chart. This is also a great way to identify trap traders. This is also a great way to identify a real breakout versus a fake out. Now, if you see, especially stacked imbalances, a stacked imbalance is when you have three or more on top of each other. Okay, stacked imbalances are three or more imbalances on top of each other, and that means that there are aggressive traders. And when we see aggressive traders, we need to be very careful and look to see what the market wants to do next. Now, look at this right here. We had aggressive traders shorting down here, stacked imbalance, and then all of a sudden we see a move contrary to that. What does this tell us? It's basically telling us that these shorts were absorbed. These market shorts were absorbed by limit buys. Now they're trapped, and we can expect price to get a move to the upside, which we can see from this point onward. Price does get a movement to the upside. Let me actually make this a little bit easier to see here. Yeah, okay, cool. So this is the 30-minute chart, 40 tick. This is what I like to use when I'm actually looking for imbalances at key levels of support. You know, if I had seen this right here with 0 buys and a stacked selling imbalance, this is actually a very bullish thing where I'm expecting price to I'm expecting these shorts to get trapped and price to get a movement to the upside as well. Let's see if we can find it on the opposite side now. You know, there's so much price action going on here the past few days that I don't know if we had a good example of that during the past few days, to be honest with you. Not on the 30-minute time frame. Now, just because you see imbalances doesn't really necessarily mean anything. There's always imbalances. We want to look for these things at key levels of support and resistance. Okay, key levels of support and resistance. So, for example, the one I just showed you. But yeah, these are imbalances. These are stacked imbalances. Whenever we see these things, we need to kind of see what's going to happen here. Either if we see stacked imbalances at support, it's either going to lead to a breakdown of the level, or those traders are going to get trapped. Okay. If the market starts to move against the aggressive traders, it means that all the volume, right, wasn't effective at moving the price in that direction. And so you should expect a big move in the opposite direction because those traders are trapped. So like I just showed you, for example, if there's a lot of shorts opening up at support and we see those stacked imbalances, but price doesn't move down, instead it moves up, it's showing us that there is a limit order absorbing them, and the movement downwards or the movement upwards will probably be a pretty aggressive move in the opposite direction. And we're going to talk more about this in the CVD section, the cumulative volume delta, because it kind of goes hand in hand right here. But I want to talk about identifying a true breakout or breakdown of a range or a level, because if we have an order flow chart, we can kind of get a sense of if something's a true breakout or not a true breakout. And I'm going to go back to the recent breakout that we just had of the level last night. So let's see, where did that happen? I guess I have it squeezed together here. Yeah, I'm looking in the wrong spot. So we had this breakout that happened. We had this resistance. Let me actually show you on TradingView. We had this very important resistance last night that we just could not break out of for the longest time, and we were forming this range right here. We were forming this range right here where we had the low and we had the high. And essentially, we did not break out. We tried to break out right here, but came back into it. We tried to break out a few more times, were unable. And then finally, we did break out. So what we want to see on a true breakout is we want to see lots of imbalances in the direction of the breakout. Okay? If you approach the top of a range and there are selling imbalances and price is not moving up, it means that there is absorption, and you should check CBD. We're going to get into this more in the later session. But if you're approaching a resistance and you see a lot of selling and price doesn't move down, that's actually very bullish. We're going to get that more into that in CBD. But let's take a look at what happened as far as the imbalances and trap traders and stuff like that go when we're getting to these key areas, and then we'll look at what happens at the actual breakout and how they kind of differ from each other. Okay, so first of all, we tried to break the resistance the first time, and what do we see up here as we're getting to the top is we don't really see any imbalances, right? We don't see selling or buying imbalances at all up here. So this is not very, very strong looking as a potential breakout. Now let's take a look at the second time we attempt to break out of that resistance, right over here. Okay, what happens? We have some imbalances, nothing too crazy here, nothing too crazy. Okay, and we come back down. And now look at what happens the third time that we try and break that resistance. Look at all these stacked imbalances. There are so many stacked imbalances. Lots and lots and lots of volume. So much more volume than ever before in this range. Okay, we have millions and millions and millions of volume, and more so if we put on the bid ask with imbalances, we have millions and millions and millions of longs, far outweighing the number of buys. Okay, and more so, we can see that these trades are not getting trapped. Okay, they're not getting trapped, but they're continuing to come up. All right, so this is really what we want to see at a break up or a break down of a level. We want to see heavy aggressive trades coming in with the follow through, right? If we see heavy aggressive trades coming in and we're not breaking the level, then, you know, we need to consider that there's absorption. But if you see those imbalances, lots of volume as we come above a resistance, that could be an actual breakout. Now, personally, I don't trade breakouts, but this is showing me that this is a legitimate breakout right here. This is not going to be a fake out, right? And it looks much different than the previous times that we've tried to come above the resistance, right? Compare it to what we saw over here, where we're coming above the resistance, and we just don't really see anything of notability at all right here. Okay? Now, there's other ways that we can look at this kind of stuff. We can look at the statistics bar down here. We're going to get more to this in the next session. But basically what the footprint bar does is it's giving us all the data as pertaining to the entire candlestick. So we can zoom in and we can see individual ticks, and then we can see all together. And then also we have CVD, which is going to be the D bars thing. In the next few sessions, as we get more specifically into delta and CVD, we're going to be kind of combining all these things together to talk about what we should exactly be looking for at specific levels. But let's just kind of go through a few more examples here of what potentially we can be looking for, because let me go back in time to the bottom that we put in way back here at 33K. You know, right down here we could see a bullish divergence on the 4-hour time frame, as well as if we do go into exo charts, we can see that there were a lot of trap traders down there as well as we came down to that key support. Now again, remember, that was a key support. That was not just an arbitrary level. That was a key support. So let's get back there. I know it's been a while. This is where it happened here. And if we zoom in, look at this, stacked imbalances at the bottom right here. Actually, even on lower time frames, there were a lot more stacked imbalances right here, trapped traders at the bottom. And if we just put on now a bid-ask profile and turn off the text, we can see that, yeah, there's a significant amount of, if we just kind of draw in this general area, there's a significant amount more sells than buys that are immediately under the water when we come up above these levels, right? And so that is another example of identifying trap traders and using the order flow to make decisions in your trading. Now, for me, I do not make any decision when it comes to trading unless I also see confirmation on Market Cipher, because a lot of times you will see these types of things happen and they do result in a move, but I like to get a little bit more confirmation. So that is it for this session, guys. In the next session, we're going to go over using delta more, CVD, as well as the footprint bar statistics to make more informed decisions as we enter our trades. All right, y'all. Peace.